fair value today, Tim Peterson would tell you, is somewhere in the low 50s. I'll even round down to be conservative to 50. Normally in a halving that goes to 100. Then in a normal cycle, we go to 2.3x fair value because of the FOMO and all the momentum and the leverage. But I think leverage is lower this time. I believe in the next 12 months-ish. So we're a couple months, about 3 months into the ETF, and we've gotten about 10% of what I believe is coming into this space from the registered investment advisors that control all the boomers' cash. So the boomers have 30 odd trillion with these financial advisors.
Bitcoin's fourth halving event was executed on April 20th, 2024, at block height 250,000, cutting down rewards issued to miners from 6.25 Bitcoin to 3.125 Bitcoin. Curiously, Bitcoin prices did not move much in the aftermath of the halving. Morgan Creek Capital's founder Mark Yusko said a wave of fear of missing out is on the horizon for Bitcoin. Speaking at Bitcoin Investor Day, Yusko pointed out that historically, Bitcoin's fair value has doubled with each halving cycle. Bitcoin whale activity and the weighted sentiment of the crowd suggest a bullish bias is taking over the cryptocurrency. As the fear of missing out, FOMO, rises, Bitcoin could set a clear way upward to $70,000 this week. Yusko speculates that, instead of the usual 2.3x fair value increase during the cycle's peak fueled by FOMO and leverage, this time, leverage might be lower. On-chain data shows that medium priority transactions now cost $8.48, while high-priority transactions cost $9.32. In the aftermath of the halving, these fees spiked to over $146 for a medium priority transaction and $170 for a high-priority transaction. According to Yusko, the landscape has shifted with the rise of oracles and the introduction of meme coins and related technology on the Bitcoin platform. Consequently, although past halvings typically doubled the fair value, higher transaction fees could temper this effect, potentially resulting in a fair value increase to around 80. Ready to delve deeper into the world of insights? Take advantage of our latest updates. Subscribe to the channel now and turn on notifications to stay informed.
The history tells us that the 12 months following the halving are the hyperbolic move cycle. And that makes sense, right? Just logically, what does the halving do? Well, it cuts the supply of block rewards that pay the miners for securing the network. So if the miners' costs are relatively fixed and their revenue goes down, in theory, a whole bunch of them would go away unless the price were to move. I think it's one of the most ingenious parts of the code. And there's a lot of ingenious parts to the code. But the fact is, in every previous halving, basically what happens is the fair value of the network doubles. Now, there is one nuance this time. And, I don't know if you've been following it very closely, but, there's the whole development of ordinals a year plus ago. And now, as of the halving, there was this development of runes, basically meme coins, or the technology to do meme coins on Bitcoin. And, everybody's talking about it, and some people hate it and some people love it. The reality is, what it does is it generates a lot of transaction fees.
Yep.
And transaction fees also reward the miners. So I think this time, instead of the fair value today, Tim Peterson would tell you, is somewhere in the low 50s. I'll even round down to be conservative to 50. Normally in a halving that goes to 100. But let's say this time it only goes to 80 because the transaction fee offset. That's made up math, but it sounds right. And then in a normal cycle, we go to 2.3x fair value because of the FOMO and all the momentum and the leverage. But I think leverage is lower this time. And so if that FOMO period is like the previous two, where from November to December, go up orders of magnitude. I mean, remember, we went from 10,000 to 20,000 in 8 weeks.
Activity in the U.S. Bitcoin ETF market has surged once more as Hong Kong prepares to launch its spot Bitcoin ETFs on April 30th. On Wednesday, April 24th, net outflows of $120 million were recorded for spot Bitcoin ETFs, coinciding with trading volumes reaching a 4-week peak. According to recent data from on-chain analytics firm Santiment, Bitcoin Exchange-Traded Fund ETF volume has surged, hitting its highest daily total in the last 4 weeks at $3.62 billion. According to Yusko, due to Bitcoin's multiplier, which the executive says is sitting around 20x, $300 billion being added to the crypto king would raise its market cap by $6 trillion. Seasoned hedge fund manager Anthony Scaramucci thinks that Bitcoin's market cap will ultimately eclipse gold's $16 trillion valuation. Now let's redirect our attention to a video.
There are multiple factors in markets, and the biggest one really is supply and demand, basic Econ 101. And we had a pretty significant demand shift, and it hasn't fully played out. In fact, it hasn't even come close to fully playing out. The math that always amazes me, I believe in the next 12 months-ish, so we're a couple months, about 3 months into the ETF, and we've gotten about 10% of what I believe is coming into this space from the registered investment advisors that control all the boomers' cash. So the boomers have 30 odd trillion with these financial advisors. Not all of them will. UBS still hasn't said I can buy IBIT in my account, right? It's my money, my account. I can't buy it because they know what's good for me. Vanguard, same thing. So there's going to be 300 billion, I believe, that's 1% of 30 trillion, that comes in to this space. Scott, that's actually more money than has ever converted to Bitcoin in 15 years. Yeah. That's a pretty amazing thing, because what people forget is that multiplier effect of the bid ask, right? I convert some fiat into Bitcoin, but then I don't want to sell it. So someone's got to bid a higher price to get me to sell. And so you get that multiplier. Now, I don't think the multiplier is whatever Bank of America says, 118. Yeah, when we were talking pennies or dollars or $10 or $20, the multiplier was really, really big. Today, I'm going to say the multiplier's probably more like 20-ish. So 300 billion would add 6 trillion of market cap. Well, no, here's the crazy thing. In your 401k, not yours personally, but in people's 401k, they set the allocation on the day they start their job, and they choose 1 over X. So if there are 7 choices, they put 1/7 in each, and they never change. And they never rebalance, not ever. So people putting this in their 401k, not the 401k, in their retirement account, their IRA, it's over. And to your point, they're not going to stare at it. They're not going to look at it. And this idea that number go up, that's not the point. The point is the utility is going to continue to go up. The embracing of the technology is going to continue to go up. And at the end of the day, it is a finite asset.
Amidst rising bullish sentiment and whale activity, Bitcoin's trajectory appears upward, potentially reaching $70,000 this week. Bitcoin's recent mining reward halving has altered the market in such a way that it could potentially lead to cryptocurrencies' demand being 5 times greater than that of supply, according to the latest projection by analysts at the crypto exchange Bitfinex. What potential risks or challenges could disrupt the anticipated bullish trend in Bitcoin's price and market capitalization? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.